let's talk specifics now. And one of the big issues that I know that IVCA has been pretty vocal about, and this was again a budget announcement that the finance minister had made, not this budget but the previous budget, talking about the possibility of global listing by Indian companies, by Indian startups. And then there's been a U-turn on that, and that route and that avenue for now seems to be shut. Is this something that IVCA took up with the committee?
No, absolutely. I think, the fact that Indian startups do not have access to overseas listing today puts them at a competitive disadvantage. Right? They do not have access to global pools of capital as some of their peers may. And so what companies are effectively trying to do or trying to get around the fact that you cannot list overseas is to create a structure overseas. And that is fundamentally the wrong approach from a country perspective, right? You're seeing Indian companies trying to domicile in Delaware or other jurisdictions so that they can access those markets. And what you're doing is effectively, you're taking away taxes, you're taking away jobs. It's just a convoluted way of trying to do it. I think this is a very simple matter, and it's globally prevalent. Of can you allow Indian companies to list overseas? Yes, we understand that India is a country where we are not fully convertible from a capital account perspective, but there are checks and balances that can be built in to protect against those aspects. But this is the point that we've been having conversations, and there has been, as you mentioned at the start of the show, the honorable finance minister has talked about it, and so we are hopeful that there will be some constructive progress on this matter.
Okay. Speaking of constructive progress, Mr. Srinivasan, again, these have, of course, been long-standing demands that industry has put forward, and I would imagine that the committee will look into the recommendations that have come in, treating listed and unlisted securities on par, and also the often repeated demand as far as double tax on ESOPs are concerned. Do you believe that, there is much more of an open dialogue, conversation around these two specific issues? Is that the sense you get?
Shireen, I think basically the way I would like to think about your question is to say that the timing at which this is happening, when the behavior of the world around the Ukraine-Russia issue has clearly pointed out that every country needs to look after its interests very, very strongly. And I think that is going to spur a lot of the behavior of this government, whether it is to do with domestic capital being more easily available. We have 1.5 lakh or 1.5 trillion rupees worth of pools available from insurance, pension, which are not really being directed into venture capital and private equity. So they will basically think about the fact that Atmanirbharta for domestic capital means that these frictions, like you said, parity between public and private, or making sure that startups become easier to keep in India. The point that Ashley said, one of the reasons people take the startups abroad is also because ESOPs have become such an important part of capital. You cannot afford to pay crores of rupees a year to each employee, but ESOPs can be. But every time if ESOP vests, then you have to pay, exercise it, you have to pay tax. And if you don't allow the employee to vest and it's dangling, then it's not fair to the employee, because they may feel manipulated that you're using tax as a reason, but not really letting them have the candy and sort of dangling the candy in front of them, right, because of tax. So there are, I think, this issue of wanting India to be independent, and the way this government has done various schemes like PLI, out of the box thinking. I'm hoping, and maybe it's just my bias that I want this industry to have this WhatsApp moment, that there'll actually be a lot of changes on parity, carry being clearly defined, and getting maybe, say, a pension fund and Ministry of Labor and Employment run a process to appoint 2 fund of fund managers who will then take that very, very precious money and divert it to the AIFs in a very careful way. And I think automatically what probably FM meant in her remarks in Washington is to say that by doing all these kind of things, then maybe you don't have the incentive to list abroad. I don't think people are listing abroad because of the need for foreign capital. I have a different view on that. I feel people are listing abroad because of the fear of the friction in India. Things like you said, double taxation on ESOP, parity on taxation, what SEBI's listing norms not being light touch, right? After all, everybody wants to be here and they want India to grow. No, everybody has a much broader view of their life than just capital and economics. So I am hopeful the Ukraine war, this government's boldness, and the need for domestic independence, Atmanirbharta, domestic capital to earn money in a country which has got a current account deficit, to export our profits is not the cleverest idea.
Yeah. No, it certainly is not the cleverest idea. But, you know, Pratibha, speaking about this WhatsApp moment that Gopal Srinivasan has referred to twice in the course of this program so far, let's address that issue. I mean, it is a difficult environment that we're currently operating in globally, and that is already impacting Indian startups. We talked about how we have seen funding come off, dry up quite significantly, and that's expected to continue. We're already seeing many companies announcing plans to scale down, lay off. Yesterday, one of the big boys in the edtech space, Byju's, talking about laying off 2,500 people, and that's not a small number. So the environment is challenging. Now, for us to be able to really be able to achieve that WhatsApp moment that Mr. Srinivasan is talking about, in the near term, regulatory uncertainty for sectors like education, where you know, the government looks like it's wants to sort of come in and say, you know, there is need for regulation, or in the gaming space where there is no certainty yet on the GST levy, plus you've got, you know, high courts and governments deciding on what should be, you know, construed as betting, what should not. How much of that is adding to the woes and the sort of downward sentiment within the ecosystem at this point in time? Of course, the global challenges, but some of these domestic regulatory issues, is that weighing on sentiment today?
Oh, very much, Shireen. You know, when you talk to global investors, big issue that comes up is just regulatory uncertainty and certainty on taxes. You know, again and again, we hear that play out saying, you know, we don't know when we're making an investment. And this is sticky investment. Any investment that goes in through either of these routes, PE or VC, you know, it's a long-term investment, 7 to 10 years. During that period, you know, they're used to in developed markets having stable laws. You know, I've practiced globally. I've practiced in New York, Tokyo, Hong Kong. When we did transactions, we didn't worry about laws as much because the laws were very set, and you know, it was a commercial negotiation that the lawyers were dealing with. But in India, you have to keep in mind that, you know, the law might change. The law is changing while you are doing the transaction, and then the market moves. The regulatory approval sometimes can take, you know, between 6 months to 1 year, despite, you know, best efforts from the government to make that more streamlined. You know, all of this global investors are not used to, and that if we can solve for, I think the global markets, whatever they are facing, will not have as much of an impact on India, because if you read any reports, the Indian macroeconomics are looking pretty good, right? So we should actually be getting advantage of what's happening globally, which we are not, because simply we have not yet been able to solve for this issue. So, you know, knee-jerk reactions when, and I can imagine there'd be a lot of pressure on the government to start regulating when there is noise around gaming or when there is noise around edtech. But yeah, long term, it really affects, you know, especially these investors, because they look that I have put money into the country, I will exit in 7 years. Between that time period, at least from a regulatory perspective, my investment shouldn't go to zero.
Yeah, and I think predictability and certainty, especially when it comes to regulation and taxation, is what investors, both domestic and foreign, why just foreign investors, domestic investors as well, want that certainty. Ashley, let me come back to you. The committee has been asked to submit its report by December, and I would imagine that if they do meet that timeline, then perhaps we could see some elements, if not all of the recommendations that the committee makes, find their way into the budget. That is my expectation, and that's how really the budgetary consultation process works. So this is my guess, essentially. But is that your assumption and expectation as well?
Shireen, we are equally hopeful that that does play out in that time frame. We all do know that some things do slip up in terms of timelines. So there is a December deadline. The good thing is that the committee, we believe, has done a number of meetings since it's been constituted, a few weeks ago. So they are progressing at a high speed, and they're committed towards meeting that date. The budgetary process, does start a few months prior to February. We are hopeful that some of the key recommendations at least get included in the budget, even if not all of them, because we do understand that the government will need some time to mull over. But we're hopeful that some of the things that Gopal talked about, for example, or Pratibha talked about, we're hopeful that some of those things there is some clarity being brought in.
I agree with you. But the budget sort of becomes the seminal event when we talk about taxes and tax changes specifically. But of course, many of the other aspects can be dealt with outside of the budget as well. But Mr. Srinivasan, let me end by asking you, and what gives me hope that a lot of the issues that we've discussed and that you've put on the table here, they require the silos between the market regulator, the central bank regulator, North Block. They need much more of a sort of, interministerial, inter-regulatory approach. And just the fact that you've got a former SEBI chief heading the committee, you've got Mr. Mahalingam, former SEBI and RBI as a member. You've got a former member of the GST and the CBIC there in Mr. Nagendra. You've got a former chief commissioner of income tax. That gives me hope that we could perhaps see this committee move on significant changes.
Shireen, I tell you, Mr. Damodaran gave us a small WhatsApp moment when he was SEBI chief, right? He gave us QIB. QIB revolutionized in those days, if you remember, the stock markets like never before. So I have a lot of hope that he understands this from his past record. And if I go through those 160 changes, Shireen, there are only about 4 or 5 which are legislative changes which need to be in a finance bill. So I'm sure that they could be releasing these ideas to the revenue department much ahead of time. If I had to make a bet on this, which I would be like, 70% positive that something can happen in the budget. And 70% is a very high number given these kind of businesses.
You better worry about a 28% GST being levied on you, Mr. Srinivasan, for making that bet. But we certainly hope that this is going to be taken forward. If not in the budget, then soon enough. Always a pleasure, Gopal Srinivasan, Ashley Menezes, and Pratibha Jain. Thanks very much for joining us here on this edition of Young Turks to talk about the recommendations that are being considered and being reviewed by the expert committee that's been set up by the government, headed by the former SEBI chief, M. Damodaran. Will it be the Indian startup ecosystem's WhatsApp moment or not? That's the big question, but we'll be tracking that story very closely right here. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.